Hello friends, in today's video we are going to talk about standard costing, the concepts of standard costing, what are the important terms of standard costing, and we will try to understand what are variances and how to compute variances, what is the concept behind variances. So let us begin. Standard cost. What is standard? What is standard cost? Standard cost is a type of management accounting where you set a standard to all your cost associated with the production. When I say standard, that means you set kind of a benchmark or you plan what will be the cost for my desired output, right? Standard cost is, let's say, planned cost which you plan, the cost you plan to incur to manufacture any product. Then we have something called as actual cost. Actual cost. What is actual cost? Actual cost means the cost which you actually incurred. What is the amount you actually paid to procure your materials, or what you paid to the labor or for your overheads. That is actual cost. For an example, let's say we are manufacturing product X. So to manufacture product X, I plan my standard cost to be 1 lakh. Total standard cost to be 1 lakh. Now when I actually manufacture, the product, my actual cost came to 1,20,000. My actual cost came to 1,20,000. So this 1,20,000 is my actual cost, and this 1 lakh is my standard cost. This is my standard cost. Now, once we have identified, okay, what is my standard cost, what is my actual cost, what do we do with it? Then we calculate something called as variances. What is variance? Variance is basically the difference of amount between my standard cost and actual cost, right? So in our example, I had planned to incur 1 lakh rupees to manufacture product X. Which is my standard cost. However, I incurred 1,20,000. So the difference of these two will become my variance, which is 20,000. So the difference of these two will become my variance, which is 20,000. Now when we talk about variance in this example, now I got 20,000 as the difference, right? But what is this 20,000? Is it a profit to me or is it a loss to me? I identified 20,000. Okay, I say, okay, my standard cost was 1 lakh, my actual cost is 1,20,000. 20,000 is the variance now. But 20,000 what? Is it profit or is it loss to me? Have I incurred 20,000 more than standard, or have I incurred 20,000 less than standard? So we do not use positives or negatives, that is, we do not use the plus or minus sign here. So if 20,000 is an excess expenditure, that is, if my actual cost is more than my standard cost, we call it adverse. And to denote adverse, we use A in brackets. We write as A in brackets. But what if that my standard cost is 1 lakh, but my actual cost comes to only 80,000. Then my variance is again going to be 20,000 only. But how do we denote this? We denote it as favorable. F. We denote it as favorable F. So remember, if my standard cost is less than my actual cost, it is an adverse situation. That is, we are at a loss there. So we denote it as A. If my standard cost is more than my actual cost, it is a profitable situation. That means it is a favorable situation, and we denote it by F. Now, Now further, when we talk about cost, there are always mainly two types of cost. There are always two types of cost. One is the direct cost. One is the direct cost. And the other one is indirect cost. The other is the indirect cost. So first let us understand what is direct cost. Direct cost. So in any manufacturing, let's say we are manufacturing product X, right? In manufacturing product X, what will I require? I will require material, right? In manufacturing product X, I would require material, I would require labor, right? Then I require a factory where I can manufacture it, or a plant for which I will pay rent or lease, right? And now I have manufactured product X. I also have to sell it, but to sell it I need to put it in a package. Say for example, if you are selling this pen cannot be sold as it is. I need to put it in a box. Before selling it, I need to put it in a box. So we will have packing expense. So there are other expenses also which are associated in a normal manufacturing process. There are other expenses also associated, but for our understanding, let's take this example of these four expenses. So now to manufacture product X, we need material, we need labor, then we need a factory, so for which I will pay rent, then we would also need packing. Now out of these four expenses, there are few expenses which directly relate to my production, means without which I cannot produce the product. When I say produce the product, now for example this pen, without raw material, that is the plastic which is used in this pen, without the raw material or the plastic, I cannot manufacture this pen, right? And then there is labor. Now I purchase the plastic, I purchase the machinery, everything. But unless there is labor, unless there is some person who is able to operate the machine, assemble the pen, this pen cannot be made, right? So we need labor as well. So these costs are directly related to my product, without which I cannot even manufacture the product. Those are called direct cost. So examples of direct cost would be material, without which I cannot even manufacture the product, and labor. There are other direct costs also which are involved. However, for our understanding, let us stick to these two costs, right? Then we have talked about material and labor. What about rent and packing? Rent and packing are also expense, are also related to my production. However, they are not directly related to my production. That is, without paying these two, without incurring these two, I can still manufacture this pen, I can still manufacture this pens. However, these expenses support or are ancillary in nature to my production. That is, without a factory building, without the paying rent to their factory building, you cannot have a place where you can manufacture your pens. So that is an indirect cost. Without the factory, you can still manufacture the pens. However, you need a place. It supports your manufacturing process. So that becomes my indirect cost. Then coming to packing. Now, packing is something which you require to sell, not to produce. Without package, you can produce. You already have a produced product before packing, right? If you are at the stage of packing, you already need to have a produced product. Now, so packing is also an expense which is indirect in nature. That is, it supports the product. However, it is not the main component of the product. So packing also becomes an indirect cost, right? So now we have learned what is direct cost, what is indirect cost. in costs further, there are two different kinds of cost. They are variable cost and fixed cost. Variable cost and fixed cost. First, let us understand what is variable. What is variable cost? Variable costs are costs which are of the nature that will vary, or that will change with the change in my production level, Say for example, let us take an example of material itself, right? Let us take an example of material. To produce 1 unit of product X, let us say it requires 10 kg of material. To produce 1 unit of product X, it requires 10 kg of material. Right? So this, now if I am producing, let's say 1000 units, of product X, I would need 10,000 kgs of my material. Now, if I am purchasing at 100 rupees per kg, if I am purchasing material at 100 rupees per kg, my cost will come to 10 lakhs. My cost of material will come to 10 lakhs. Now, if I am producing 10,000 units of product X, I will need 1 lakh kg. I will need 1 lakh kgs of material, 1 lakh kg of material, and my cost will increase to 1 crore. Right? So this material is variable in nature. That means with every unit increase in my product, my cost is also going to increase. So that is variable in nature. That means variable, right? With every increase in my production, or with every increase in my output, my cost is also going to increase. That is variable cost. So in our example, variable costs are material, which is usually material are variable in nature. That is, for every unit, in our example, for every unit of X, since we require 10 kg of material, to produce 2 units I would need 20 kgs, to produce 100 units I would need 1000 kgs. So that becomes, material becomes variable in nature. Then also we have labor. Labor also falls under the variable cost. That is, normally we pay labor at a variable rate. That is, we pay labor at an hourly rate, right? So if you are working for 8 hours, I pay for 8 hours. If you are working for 16 hours, I pay you for 16 hours. There are no 16-hour shifts. You can only have 8 hours plus some additional overtime. Keeping that aside, if you are working for 8 hours, we pay you for 8 hours. If you are working for 10 hours, we pay you for 10 hours, right? So labor is also something which is variable in nature. Then we have rent or lease, indirect cost. Indirect can also be variable and fixed. Direct can also be variable and fixed. Do not get confused that variable and fixed are only under direct or indirect. Direct and indirect are a different set of costs. Variable and fixed are a different set of costs, right? Direct can be variable and fixed. Indirect can also be variable and fixed. The other way around is also true. That is, variable cost will have direct and indirect cost. Fixed cost will have direct and indirect cost. Now, coming to rent or lease. What is the nature of rent or lease? Rent or lease is fixed in nature. How? Let's say you have taken a factory on rent. Now, you enter into an agreement with the factory owner the factory owner saying that every month I am going to pay you 1 lakh rupees as rent. Every month I am going to pay you 1 lakh rupees as rent, right? When you say that, now the factory owner is not going to charge you less rent or more rent if you are using his factory for less period or over period or excess. Say for example, for the month of April there are 30 days. For the month of April there are 30 days. You have an agreement with the landowner saying that every month I am going to pay you 1 lakh rupees rent, right? Now in the month of April, for the landowner it does not matter if you are using the plant or factory for 1 day, for 10 days, for whole 30 days, or you are not using at all. You have to pay him 1 lakh. You have to pay him 1 lakh. So that becomes fixed in nature. That becomes fixed in nature. So fixed costs are costs which do not depend on my production level, They are constant. They will be fixed in total. In our example, when we talk about rent, it does not matter if I am producing 1000 quantities or 10,000 quantities of product X. I still have to pay 1 lakh rupees rent only. So rent or lease is fixed in nature. Then coming to packing. Packing again is variable in nature. Why? Because packing material or the labor for packing will be used proportionate to my output. If I am producing 1000 units of product X, my packing material or labor will be used only to the extent of 1000 units. If I am producing 10,000 units, my packing material or labor will be used only to the extent of 10,000 units. So packing again is a variable cost. Right? So these are the basic things which we have to remember while doing our problem, any costing problem actually. Now moving on, let's understand in depth what are the different variances which we find in standard costing. So now I told you we have cost called material, we have cost called labor, right? And we have something called as indirect cost. Now when we say indirect cost have got another name for it. Which is overhead, which is called as overhead, right? And when we are doing a problem of standard costing, we do not use the term indirect cost. We use the term called overheads. Right? However, the nature of expense is still the same. Those are still indirect cost. However, we call them as overheads. Right? So remember that we will call them as overheads. Now, when we talk about material, let's take an example. Now, I am producing product X, right? I produce product X, right? Now, to produce product X, I need, say, material. I do market research, everything, industry practice, everything, and ascertain that the rate per kg of material will be, let's say, 10 rupees. Per kg of material will be 10 rupees. The rate for the material is 10 rupees per kg, right? And I say that this will be my standard rate. We'll come to overheads and labor little later. Let us understand material first. Okay. So I say that 10 rupees is my standard rate, and then I say that the quantity to manufacture 1 unit, the quantity to manufacture 1 unit of product X is 2 kgs. 2 kgs per unit. 2 kgs per unit. This is my quantity to manufacture per unit of product X. But this is not my standard quantity. This is not my standard quantity. Why? Standard quantity is always in terms of what is my always in terms of my output. Always in terms of my output. That is, say if I am planning to manufacture 1000 units of product X, my standard quantity will be 1000 into 2. Why 1000 into 2? 1000 is my output, planned output, or my actual output. You can also take it as actual output. 1000 is my output, and 2 units or 2 kgs per unit is my is the quantity which is required to manufacture product X. So this is my 2000 kgs. This is my standard quantity. This is my standard quantity, right? This is my standard quantity. Now, further, I produce 1000 products. I produce 1000 units of product X. Okay, and when I produce, my actual rate, that is, I had planned that I will buy per kg of material X at 10 rupees. I planned to buy per kg of material X at 10 rupees. However, I buy it at 9 rupees 50 paise per kg. I was able to buy it at 9 rupees 50 paise per kg. Now this could be various reasons why I could have bought at a lower rate. It could have been a lower quality material, or it could have been the same quality, however the price might have dropped, or I could have got a discount on bulk purchase. It could be any factor. However, we don't have to worry about the factor why the rate is less for standard costing. The only thing we have to see is whether it is less or more. Why? We don't have to bother right now. Now, I purchased material X at 9 rupees 50 paise per kg, and when I manufacture 1000 units, right, my actual output, my actual quantity of material X, my actual quantity which to manufacture 1000, I had planned that I will use 2000 kgs, but when I actually manufactured 1000 units of product X, I saw that I used 2100 kgs. I utilized 2100 kg. Right? So this is my actual quantity. Now, in our example, what is my standard cost then? So what is my standard cost? See, to manufacture product X, right? To manufacture product X, I need material, and I say that for every unit of product X, I need 2 kgs of material. So total quantity required to manufacture 1000 units comes to 2000, right? And I say that every kg of material I plan to purchase at 10 rupees. So if we multiply these two, multiply my standard rate and standard quantity, I get my standard cost, which is 20,000 in this case. Right? Now, so 2000 is my standard quantity and 10 rupees is my standard rate. This gives us standard cost. This gives us standard cost. This gives us the standard cost. What is my actual cost now? What is my actual cost? What is the quantity I have actually used to manufacture 1000 units? What is the quantity I have actually used to manufacture 1000 units? It is 2100. 2100, right? And what is the rate at which I have actually purchased? What is the rate at which I have actually purchased material? 9.5. So if we multiply these two, we get 19,950. So 2100 is my actual quantity into 9.5 is my actual rate. 9.5 is my actual rate. This gives us the actual cost. Now we have identified what is my standard cost. We have identified my actual cost. Next, what we do is we identify what is the variance. We call it as material cost variance. So the formula for this is standard cost minus actual cost. Always it is going to be standard cost minus actual cost. I am comparing my actual cost with my standard. Right? So it is always going to be standard cost first. This is what I had planned, but how much did I actually incur, right? That is how the formula is designed. If you do it the other way, that is actual cost minus standard cost, then your whole problem will be wrong. My base here is standard cost. Right? On the standard cost, how much more or less have I incurred? That is what we have to find out. So standard cost, so the formula will be standard cost minus actual cost. So in our example, what is my standard cost? 20,000. And what is my actual cost? 19,950. So what is the variance here? What is the difference of these two? It is 50 rupees. Now this 50 rupees is either favorable to me or unfavorable to me. This 50 rupees, have I saved 50 rupees or have spent excess 50 rupees? Is it kind of a profit to me or is it loss to me? Right? In this case, it is profit. Why it is profit? Because my actual cost is less than my standard cost. So it is a profit to me. However, in standard cost, we do not refer it to as profit. What do we refer to as? Favorable situation. It's a favorable situation. So we say favorable. We denote it by F. Right. Now we have computed our variance. Now we say, okay, in material I had planned 20,000 cost, but I have actually incurred 19,950 only. 50 rupees I have saved. Right? Done. No. Why? Because you have to further analyze. That this 50 rupees savings is due to what? Is it due to savings in the rate of the material? Have I purchased the material at a lower cost that I have saved 50 rupees, or have I actually saved in terms of material usage? That is, have I used less material than what I had planned and thus saved 50 rupees? Or is it a combination of both? Right? So this is another level of variances which we find. That is, one will be our price, that is the rate, right? And then we will have something called usage. We call it as usage. So this could be rate. In material we call it price. In labor and overheads we call it rate, right? And this is usage, or in labor and overheads we call it as efficiency as well. Rate, price, there is another term which we use in overhead. It is called expenditure variance. Okay. So when we say it could be rate, we call it expenditure, or we call it price. And another one is efficiency or usage. So So first one, rate, expenditure, price. The names differ from variances to variances. That is, in material we call it price, in labor we call it rate, in overheads we call it expenditure. But the concept still remains the same. That is, the concept behind this is whether the variance, how much is the variance due to change in price. When I say change in price, that is what the change of price from my standard cost to my actual cost. So in our example, we had a standard price of 10 rupees per kg. We had planned that material, I will purchase the material at 10 rupees per kg, but when I actually purchased, I purchased it at 9 rupees 50 paise. I purchased it at 9 rupees 50 paise. So the 50 paise, so 50 paise is a saving in the cost. It's a saving in the cost which is attributable or which is due to my change or my reduction in my price. However, we cannot write 50 paise as my variance. Why? 50 paise is per unit, 50 paise is per kg of material, but how many kgs have I actually purchased? How many kgs have I actually purchased? So what we do is, the formula would be my standard price minus actual price, my standard price minus actual price into my actual quantity, right? So what is my standard price? 10 rupees. And what is my actual price? 9 rupees 50 paise. What is my actual quantity? When I say actual quantity, what is the material used? What is the amount of material used, which is 2100 in our example, 2100. So this comes to 2100 into 0.5, let's say 1050. 1050 I have saved. Why have I saved? Because my actual price is less than my standard price. My actual price is less than my standard price. So it is a favorable situation. I have saved this money. It's a profit to me. A penny saved is a penny gained, right? It's a favorable situation for me. 1050 I have saved due to change in my price. Now we see the second variance, that is usage or efficiency variance. Now the concept behind this is same. However, when we calculate material, we call it as usage. When we calculate labor or overheads, we call it as efficiency, right? The concept is still the same. That is, I had planned to use 2000 kgs to manufacture 1000 units of product X, right? But I have used 2100. So I have used 100 excess. I have used 100 kgs excess product, excess material. This is my usage variance. That is the variance occurring due to change in the use of quantity, or change in the use of inputs. Price is change, variance due to change in price. Variance due to change in price or rate Efficiency or usage is due to change in my use of the quantity, use of the material. So again, here our standard quantity again, we will always take standard. We will take standard first. Why? Because we are comparing it with our standards. We are comparing our actuals with our standards. So standard quantity minus actual quantity 2100 multiply by standard price. What is my standard price? 10 rupees. So what is the difference? I get 1000. Now in this example, my standard quantity was 2000. My actual quantity came out to be 2100. So I have excess usage of material. I have used more material than I had planned for. So it is not a favorable situation to me. It's an unfavorable situation to me. It's a loss to me, right? Or in other terms, we call it is an adverse situation to me. It is an adverse situation to me. So this is adverse. This becomes adverse, right? Now, if you see here if we total these two, we get 50. How do we get 50? Don't say it is 2050. Don't add these two. Why? Whenever we say favorable, consider it to be positive, and whenever we say adverse, consider it to be negative, So positive plus, okay, plus 1050 plus minus 1000. So plus 1050 plus minus 1000. What will be the answer to this? Here, using your basic BODMAS rules, you will have 1050 minus 1000. How minus 1000? Plus into minus becomes minus, and this comes to 50. What 50? Positive 50. So if it is positive 50, we will write it as favorable. So my total material variance is 50, which is same as what we have computed earlier, material cost variance 50. So material cost variance is divided into two. One is usage, one is rate. If you see material cost variance, it is made up of my standard quantity, standard cost, and actual cost. Now standard cost is made up of standard quantity and standard rate. Actual cost is made up of actual quantity and actual rate. When we divide this into usage and rate, when in usage we are comparing what is the material used, what is the variance due to material used. In price we compare what is the variance due to change in price. If we add these two, it becomes my total material cost variance. So these are the basic concepts of standard costing. I took the example of material variances for you to easily grasp the concept behind the standard costing. The terms which we used for material cost variances will differ when we compute labor variances and overhead variances. However, the overall concept will remain the same. The overall concept of the variances will remain the same. When we talk about material cost variances, we talk about price and usage. When we talk about labor variances, we talk about rate and efficiency. When we talk about overheads, we talk about expenditure and efficiency or volume. However, the basic concept behind all these variances still remains the same, be it material, labor or overheads, right? So I hope you got a good understanding of what a standard cost is, how to compute the variances, what are variances, what are the different terms used in standard costing problems. If you like the video, please hit the like button. Also share this video with your friends and colleagues and your fellow batchmates. If you have any doubts or any questions, you can write down in the comments below. You can also send me your questions on my email ID and I will try to make a video of it. If you have any concepts which you want to be cleared, you can write those as well. Subscribe to my channel because I will be regularly updating more videos on standard costing and also on the other subjects. Thank you.